Good evening. Good evening, everyone. It's a pleasure to have you this evening. And I always look forward to having you. It's exactly 5:30 p.m. East African time. So if you're watching from anywhere outside the world, outside Uganda, the rest of the parts of the world, I greet you. But here it's 5:30 p.m. So it's a pleasure to have you this evening. My name is Jenan Kanwano and I'm the Managing Director at Jonaki Holdings Limited. And at Jonaki Holdings Limited, we give credits, financial relief. So if you get financially stuck, we unstuck you. We support you and we help you recover financially. If you have projects that have sat on you and you cannot deliver on them, we support you. So we basically provide financial relief. If you need money, we give you money cheaply and exceptionally very, very quick. If you have a consignment you want to clear at the border post or anywhere else, you want to close some business, you're hard on cash, we support you instantly. So that's what Jonaki Holdings Limited is about. You can check us out at www.jonakiholdings.com. Great. So today I come again, as usually meet every Friday from 5:30 for 20 minutes now to sharpen one another, to learn from one another. And you see, all the videos that I shoot every Friday are posted on my YouTube channel, Jonan Kandwanaho. So you can always subscribe, you can always like my channel, and also click on that bell to give you notifications when the video is posted, so that you can learn one or two things. And as I've said, if you learn a number of things and you don't apply, you're as good as not learning at all. You've not learned anything. Why? Because you've not applied. And you see, until you apply, you cannot appreciate the sweetness of what it is that you've learned. Ideally, you've not learned. So the final thing on learning, the final step on learning, is you implementing what you've learned. If you do not implement what you've learned, you're a joker. You are joking. So you need to implement what you've learned. So go straight to today's talk. Today's talk is about the key considerations that you have to look at before you give credit in business. You see, several businesses give credit, knowingly or unknowingly. If I need something from your shop and I don't have cash, and incidentally I'm your friend, and I tell you, no, give me that shirt, I am going to pay you next week. You've given me credit. If I come to your shop or to your mall and I say, you know what, give me that salt or that sugar or that item, that washing machine, I'm going to pay you in 1 month's time. You have given me credit. So credit does not necessarily mean that it's financial credit. Yes, it applies to financials as well, but also in other industries, in other businesses. That's why it's important that you learn or that you watch this talk or this show, because you learn one or two things, especially if you're a business leader. If you're in business, you need to learn, because it's not only money. When you have credit, it's not necessarily money. So we give credit in different ways. If you go to the bond and you need a car, you cannot afford to pay it all hands down. And you say, no, I'm going to deposit 10 million. I'm going to give the balance of 20 or 30 million in 3 months. You've got credit from that bond. So that bond has given you credit. So that means that bond is giving credit. So there are key things that bond is meant to look at before it gives you that credit. So that informs today's talk. You have given credit, you're giving credit, especially if you're a business leader, if you're in business, you must have done it. But did you have any considerations that you looked at before you gave that credit? Is my question to you. Did you have any considerations? So now we can look through the considerations that if you made a mistake then, and perhaps even you burnt your hands, you lost some money, or you lost all the money, or you lost the item that you gave on credit, now is the time to know that, going forward, I'm going to learn these 2, 3, 4, 5 things, and I'm going to apply them so that I do not incur any other loss. Because there are a few considerations that you have to look at before you give credit. There are a few considerations you have to look at before you give credit. And if the client does not fulfill or does not tick the boxes of those 5 things that you're looking at, then you have to let go. You say, no, I'm afraid I can actually not help for now. I cannot give you credit for now. Why? Because based on ABCD, you might not have to explain this to a client, but in the heart of hearts, you know, because of ABCD, you cannot give that person credit because they are not credit worthy. Great. So let's go and shoot at it. The 5 things that we can look at to assess if the client is worth of the credits, is worth of a banja in Luganda. Great. So the first one is the capacity. One, it's important to assess if that person that you're giving credit has the capacity to pay. If they have the capacity to pay. Now, for example, if you, let's say, you run a car bond and you're giving someone credit, you need to find out if that person does not have any other loans or any other cars that he got on credit. He got on credit from other bonds. And so for us who play in the financial world, since Jonaki Holdings is a financial institution, as we look at your capacity to pay, and how do we affirm that? We look at your debt to income ratio. You might find that you have an income of 1 million and the loan that you're applying for qualifies that you pay an installment per month of, let's say, 3 million. In the heart of hearts, you will not afford. You are going to struggle. You're prone to default, and we shall have challenges with you. And you see, we want to have as less challenges, as less friction with the clients as possible, because we run on customer referral system, because we run on referrals. So if we clash with you, if we have a bad experience with you, that means you cannot refer us to your colleague, to your friend. So we are meant to assess you to know that, you know what, this Ronald has the capacity to pay. Has the capacity to pay. So we look at your debt to income ratio. So if you're highly indebted and your debt to income ratio is above 35%, definitely we cannot give you the money. Even when you have the collateral that qualifies to secure the money that you want. And I've said this several times. Some people come with the collateral worth maybe 100 million. He wants only 15 million or 20 million. Just because you have a collateral doesn't mean that you're going to get the money. Why? Because you see, our interest is not after the collateral. And that's why we, or some of the clients, or some of the customers, or some of the general public lose their collaterals. Because you see, when I come to assess you and I say, you know what, I cannot help, you tend not to like me. But in actual sense, I'm saving you, because if I do not, I'll foreclose on your property. And before you know it, you have lost a property that is worth 100 million just because of 15 million. So in actually assessing you, I'm doing you a service. I'm protecting you. Even the law highlights it. I meant to assess you. That's why it's not even advisable that you you write a sale agreement, you sign a sale agreement that you've sold me your item. It's not allowed in the law. Why? Because I'm not after your property. I want to make sure that you actually pay the money and the interest, and then I give you a collateral. So that's why we assess the capacity. Do you have the capacity to pay back? So you look at the debt to income ratio. You're meant to be earning much more than what it is that you're committing per month to pay Jonaki Holdings Limited. So that's how we assess your capacity to pay. We also we can actually affirm that by looking at your bank statement. What does it say? Some people come to us and they say, you know what, I don't bank, I handle cash. All right, I'll wish you good luck with your cash. Because as far as I know, I can only confirm your financial stand on your bank statement. So if you don't have a bank account and you transact in cash alone, I'm sorry, I cannot help. So you actually have to move to someone who can actually help. So I can only confirm your financial stand by looking at your bank statement. That's how I actually can confirm your debt to income ratio. Where else can I confirm it? Nowhere else. So capacity. It's important that before you give credit, irrespective of the business that you're operating in, that before you give credit to someone, you have fully assessed their capacity to pay you back. Or else you're going to get out of business. You're going to collapse. You're going to close shop. You can't just dish out things, because also you buy them from somewhere. If you're trading in clothes, if you're trading in cars, you buy them from somewhere. So you use money to buy them, to acquire them. So you need to recover the money plus profit to keep you in business, to sustain you. So capacity, number one. Number two, capital. You see, if you're coming to me, for example, you want a loan to support your business, the business should be already running and slightly profitable. Because you see, what are you going to use to pay me the interest? So you have to have some bit of capital. Your business should be running and a bit profitable. If you're running a business and it's in the negatives, boss, I might not be able to help. Jonaki Holdings Limited might not be able to help. Why? Because you cannot pay back. You do not have the ability to pay back capital. I'll give you an example of the car. If you're buying a car from the bond, usually the bond will tell you, you have to put down a down payment. It's like a down payment. If you're buying a car 50 million and you're getting all this thing on credit, they will not give it to you. You have to first show that you have some muscle. At least 50%. Say I'm buying a car 50 million, I'm putting down 25 million. Or else you cannot just go to the bond and say, I want a car on a loan or on credit, and I'm not putting down anything. You'll be a joker. The guys will laugh at you at the bond. So you need to prove that you have some bit of capital that you'll use to actually pay. So if you're coming to Jonaki for a loan, it's important that you have, if you're going to invest in a business, it's already running and profitable at that. Some of them, actually, most of the clients, our good clients, come when they want to scale up their businesses. They have tested the concept. They are sure that their businesses are working. They just want to scale up. They want to open other branches in other areas. And we are glad to support such kind of businesses. Why? Because they've proved concept and they're very sure that the thing is profitable. So they can actually, they will not struggle to pay. So we definitely swing into action to support them. Why? Because they have the capital. They have proven concept and they are sure that their businesses are working. So we don't fund greenfield ventures, something that is very new in the industry. It has never been done. You just thought about it and you're like, why don't I give it a shot? And you want to come to Jonaki Holdings Limited to get credit to go and give it a shot? Sorry, we might not be able to help. And we are protecting you because you're going to give it a shot. You're not sure how it runs. You're not sure if it's profitable or not. And before you know it, it will close. We shall lose and you'll lose. And it might be a bad one. It might affect our relations with you. It might affect anything else that we could possibly do in the future. So that is capital. So it's important that you look at someone's capital before you give them credit. They should be able to actually have done something to prove concept before you can actually support them. The third thing is the collateral. Now, this mostly applies in the financial world. If I am giving you money, it's important that you commit a collateral to secure your money. To secure your money. Some guys come up, especially this I speak to you who lend money, who are in the similar business. Someone will come to you with a collateral just because they want to sell it. Someone brings a car that is worth 15 million and he wants a loan of 15 million. And in the heart of hearts, the car looks beautiful. If you're not a professional and it's a Mercedes-Benz, it looks beautiful, you might assess that it's actually enough to secure the money that you're looking at. And before you know it, you'll disperse that money and you'll lose it. Someone just wants to sell the item. So unless you value it properly, then you actually can get out of business. So you might not be a professional in valuation. So you need to get a valuer, professional valuer, who will tell you that, you know what, based on ABCD, as a professional, I think that this car that the client says that it's worth 30 or 50 million is actually worth 30 or 20 million or 10 million at that. And you've had shockers of our lives to actually look at the vehicle and you assume it is way up there, and yet when the valuer does his work as a professional, the thing is way lower than that. And ideally, the client just wanted to dispose of the item. So had you given the money based on your instinct without necessarily assessing the value of the collateral, you can get out of business. You can lose that money. So as a person who is perhaps playing in this industry, it's important that you use a professional. Negotiate the right rate, but don't use your face, your eyes, and your judgment and your emotions to make a financial decision. To disperse that loan, you'll be a joker. And before you know it, you'll get out of business. So it's important There's a reason as to why you're not a valuer, professional valuer. There's a reason as to why we have doctors. You cannot start operating on yourself. You cannot start cutting off your eye or your throat or your intestines to treat yourself. There's a reason as to why there's a doctor. There's a reason as to why we have cardiologists. They are professionals. There are some things that they studied that we didn't study. So don't pretend to be a valuer, because before you know it, it will cost you a lot. We burnt our hands. See, some of the things I'm telling you, I've done them. And some I have burnt my hands. And I've learned from some. I've learned from my mentors. And now I cannot repeat them. And that's why I endeavor to come before you and speak to you, so that you do not commit similar silly mistakes. Because if you do not repent and behave and get in line and align, you'll get out of business and I'll not benefit, and you'll not benefit. People will lose out, your employees will lose out, families will lose out, because you're supporting some family. It's not for you alone. A business is not for you alone. You have a number of people that you're taking care of. You have staff, families that you're feeding. You're contributing to the economy of the country. So it's important to know that, that whole comprehensive picture, it's not about you alone. That's why I endeavor to speak to you, that you apply these things so that you keep in business, create more jobs, and support as many people as possible. Because it's not about you alone. That business is not for you alone. And if you're consuming that business you alone, and it's meant to serve you alone, then you're not in business. You cannot be the only client, you as you and your family. So that's why it's important that you take these precautions so that you can keep in business for the better of you, your business, community, and the country at large. So collateral is very, very key, especially in the financial world. And not just collateral, but you need to know its value. Because for us, you assess the value, the market value, you assess the for sale value, and then you give a particular percentage of the for sale value. As we give 50% of the for sale value. Banks can give 30, others give 40, but for us, give 50% of the for sale value. So if your car is valued at maybe 20 million and as a market value, and the for sale value is maybe 15 million, as we give you 50% of the 15 million. That's 7.5 million. So that you're protected and we're also protected. So collateral is very, very key. I doubt in other businesses if you ask for collateral or not, but it's upon you. But you have to be legally protected to actually ask that collateral. Because for us, we are legally protected to ask for those collaterals. Because we put caveats on the car logbooks, we put mortgages on the land titles. We are protected by the law. The law authorizes us. So you need to be sure that the law authorizes you to get a collateral from someone. If you have a shop, if you have a supermarket, you should know that, if you have a hardware shop, you should know that, the law authorizes you to hold someone's car as a collateral before you give them that cement, before you give them that material in your hardware. So you need to clarify that. But for the financial world, you are protected if you have a license. The other fourth thing is conditions. The conditions in which the client is in. You might look at the client and like, if I give this guy credit, he will not pay based on the conditions. There are some clients that come to you and you really already understand their intentions. They are after fleecing you. Someone cannot come on a Friday and he starts telling you it's an emergency. He wants you to transact. He's using land as a collateral. You have not valued. You have not put a mortgage on the land. You cannot do that in just one day. That's a joke. So the conditions with which a person comes are very, very key. Now, someone comes to you, they have a colleague or a relative, God forbid, in ICU, and they want money. It's an emergency. So such tricky conditions, as we do not transact. Because the condition highlights a high risk. If you're not going to invest this money in business, if you're not going to put it somewhere profitable, we are going to clash with you. You might struggle a lot to pay back. Why? Because even you yourself, you cannot point at something that you say, I picked this money, it did ABCD for me. I therefore owe to pay these guys. You can imagine, God forbid, if we give you that money and God forbid that person passes on, how do we even start collecting on you? It becomes inhuman. It becomes tricky. It becomes heartless of us. So you need to assess the conditions with which a client has come to ask for credit. The conditions. And they should be able to show you some bit of picture. The conditions in which someone has come. You cannot wait from Monday to Friday. You come on a Friday, that it's an emergency, you have a collateral as land. No, we cannot transact. So if you're giving credit to you in your own business, you need to assess the conditions. You cannot look at someone, the way he appears, the way he talks, you can actually tell that the way this person is talking is a problem. The last item as I close is a character. Now, character, majorly in the financial world, you look at someone's history, credit history. And you can only get someone's credit history by looking at their CRB from the Credit Reference Bureau that is authorized, like Metropole or any others. These are meant to tell you that, you know what, based on ABCD, the client applied for loan this several times. The client on his statement, CRB report, he has a bounce check. Now, this person gave a check well aware that, you know what, he didn't have money on the account. That's a character issue. Why did you give someone a check when you're well aware that you don't have money on the account? That's a character issue. And if you have bounce checks on your CRB report, at Jonake Holdings, we cannot give you money. Because that's a character flaw. Why did you issue that check when you knew that you didn't have money? So character is very, very key, especially in the financial world. So it's important that if you're lending money to have a license, start looking for CRB reports from clients. They have helped us a lot. They even give you the income range for a client. A client can choose to tell you, I earn 10 million per day. We've met several scenarios of the kind. And when you look at their CRB, the picture is different. The guy is earning 2 million per month because it gives you a range and where the person works. The person actually gives you a particular national ID which doesn't belong to him. When you run the CRB, the person has a different national ID. The person applied for loans like 15 times in a row of 1 week. And here he comes. After the bank denying him, he comes to you because of ABCD. So you need to acquaint yourself with this information. So that's why it's important that you run the CRB so that you can get the CRB report and make an informed decision before you disperse that money. So this applies specifically to the financial world, the financial institution. So you need to get serious. If you're running a financial institution, you need to run these things. If you're licensed, you need to get these things on board because they help you in making an informed decision. So with that, I stop it at that. Thank you for watching through. Thank you, Ronald. Thank you all the guys who are watching through. I appreciate your time. But as I said, if you learn 1 or 2, 3 things and you don't apply them, you've wasted your time and you've wasted my time. And you've not learned actually. So go apply the things. And we shall meet at the top. So may the good Lord bless you. May the good Lord shine his face upon you. May he bless the works of your hands. Go out there, bless people, bless communities, to the glory of the Lord. We pray and believe. Amen. So I wish you all the best for the rest of the Friday and the rest of the weekend. I love you all. See you next Friday from 5:30. You can always check out my video on my YouTube, Jonan Kandwanaho. Cheers and God bless you. Bye-bye.